So more people are looking to the shadow inventory, aka pre-foreclosures and foreclosure auctions, to find good deals and better priced property. So welcome to Housing Bubble 2.0 News of the Week, or as I like to call it, another episode of As the Housing Market Turns. Today is Feb 20th, 2024. Hope you're doing well. Randy Patrick here, putting the realism back in real estate. Again, hope everyone's doing well and things are going good in your personal real estate endeavors. All right. Hey, FYI, tomorrow, if you're in the greater Tampa area, I'm actually having another event tomorrow night. This is a free event. It's called Pre-Foreclosure Profits. Make big money helping homeowners with no money down. It basically is a synopsis of all the stuff we do here at our office. So again, if you want to check us out, we're here in Tampa, Florida. Tomorrow night, February 21st, 6 to 9 p.m. It's free. Show up, we'll chat, we'll have a good presentation, we'll take from there, okay? We'll be doing more and more of these as time goes on. I'm booking lots of floor space now at our kind of collab environment. We're also going to do some other interesting real estate and crypto things. So it's all coming together, folks. If you're in the area, please come and check us out. So U.S. foreclosure activity sees notable increase in January 2024. One of the things I wanted to state off the bat here is the fact that the foreclosure market is being downplayed by mainstream legacy media. I've talked about that many times over the years. I see it every month when there's statistics that are going on. It's almost like there's less and less discussion about them. Even this group, Adam Data Solutions, which I don't know anybody there, so I'm not privy to what goes on behind their closed doors. But their information that they're just producing like this. I mean, listen, they have paid for stuff. If I want to pay for all the data, I suppose I could do that. But every month it's kind of like their synopsis is getting less and less detailed. Them and other people don't even, they're the only people that I think really talk about foreclosures on any capacity. Everything else, you don't hear anything about it. So, I think it's a whole perspective now. I guess we're in an election year, and from what I understand, when that actually occurs, the economy issues or negative stuff is probably downplayed, and that's what's going on right now. There's tons of people not paying their mortgage. A lot of people are having problems with their personal economy, and foreclosures are creeping up. They're there. They were there before the pandemic. They got shut down due to the eviction and foreclosure moratorium. They're coming back with a vengeance now, and I can tell you that a lot of people, trainers, real estate agents, real estate gurus, they're now telling their folks, their flock, to look at this marketplace because this is where the opportunities are. So that's, again, I've never deviated from this from day one. The interesting thing here is that default notices, bank auctions, bank repossessions up 5% from a year ago and 10% from the prior month. Yeah, people are going to say, well, January is a more aggressive month with respect to foreclosure filings. I do agree with that, but it's one of those things that, hey, it's coming and, it is what it is. So be prepared for it. So the foreclosure completion numbers increase monthly in 19 states. Ultimately, that's, deals that go to auction and actually get, I guess you could say, get foreclosed on. So you can see that, various locations like Michigan's up, Minnesota's up, California's up, Pennsylvania's up, locations like Detroit, Chicago, New York, Philadelphia, San Fran. So we're going to start to see more volume of the foreclosures or people or homes being foreclosed on increasing. And, which makes sense. The more populated, bases and metros across the country will have their fair share or more than their fair share of deals. So keep that in mind. Now, foreclosure rates, which is almost like, number of, foreclosures per housing unit. So in January 2024, the highest rates were Delaware, Nevada, Indiana, Maryland, and New Jersey. So again, these are, pretty good populated states or states that have some pretty major cities in it. And we're seeing those rates or the foreclosure rates increase in those locations from a state level. Now, from a major metropolitan level, take a look at Spartanburg, South Carolina is up there, Columbia, South Carolina, Cleveland, Ohio, Detroit, Michigan, and Vegas. I mean, again, this is not unknown to me. I've heard about this over the years. We saw it in the last housing crisis. So it shouldn't come as any surprise. Other than Cleveland, Detroit, and Las Vegas, the population metros that have greater than 1 million people in it, the worst rates are Riverside, California, which Riverside, San Bernardino has always been a big sort of hub for pre-foreclosures, and interesting here, Indianapolis, Indiana. So, you kind of got, well, you wouldn't think maybe a Midwest city like Indianapolis would have a lot of pre-foreclosures. But again, this is what's happening now. This is not just housing prices and housing bubble. We're going deeper into the situation here and deeper into the issues with people's personal finances and personal economics or economies. So that's where problems occur. So yeah, if you look back at the last housing crisis, how did it start? Well, guess what? Everyone blames the subprime mortgages. Well, subprime mortgages, that was the start of the last housing crisis. Then it sort of ballooned, and we had basically issues with people that were equity stripping, taking money out of their properties, and now having properties drop, and now you got a short sale or get foreclosed on. With respect to where we are now, it's an affordability issue with respect to you're buying a house maybe more than you can afford. You're putting little money down, and when there's a slight 3, 5, 10% change in the devaluation, now you're underwater. And to make matters worse, you're now having an issue with respect to inflation's up, things cost more money, it costs more to live. And again, maybe you're not getting more money or increases from your job because wages have not kept pace with housing prices. So to me, where we're at today, it's not a function of bad loans, etc. It's a function of the economy and inflation, and things are way too expensive, and maybe people shouldn't have bought houses that they couldn't afford back in the day. That's how I look at it. So that's where we are. Now, foreclosure starts. This is where I look at things. So, the lenders, started foreclosure process on almost 22,000 properties in January, up 6% from last month and 5% from a year ago. This is what I kind of look at. You see, the overall foreclosure activity, which is REO sales and auctions, that's more lender and bank based. They can, put the pedal to the metal, or they could ease off on that. But the real issue is foreclosure starts. So if you're looking at that, you can see that California had the most foreclosure starts in January, followed by Texas, Florida, New York, and Illinois. Now, I'm pretty sure that's the way the population base goes. California with the most people, then Texas, Florida, New York, and Illinois. So no surprise there with respect to who the top 5 states are that are putting foreclosure starts or filing foreclosures. The metro areas, obviously New York, the city, Houston up there, LA, of course, and Miami. So Miami, 804 foreclosure starts. And you take a look at Florida, which is 2,300 and change. So you've almost got, a third of the foreclosure starts in the state of Florida are centered in the Miami area. So interesting to see how that works out. Look at Chicago too. Illinois had 913 foreclosure starts, 763 were in Chicago. So when you start taking a look at these numbers, you can go, holy crap, things are getting up there. And actually, I'm looking at New York starts and New York City. So that's something wrong with the numbers there. 1,341 starts in New York State, but New York City had 1,470. So something's going on with some of the numbers, I think, in that one. But you can see these big cities, and maybe that's the overall suburbia, etc. But there some of these larger cities and its outlying areas or the suburbs of those cities are controlling a lot of the foreclosure activity in these states. But point here is that it's starting. I've always talked about this. It ebbs and flows with the lenders and the banks, how they process, with ebbs and flows with the attorney firms and the trustees when they file. But in the end, we're seeing a sort of underground movement of more foreclosures happening. There's a lot going on behind the scenes, and we're catching up. All those couple years of no foreclosure activity now are manifesting or coming through every month as goes by. So there should be no surprise here. And folks, if you appreciate the information that I provide on this channel and my views and perspective on the housing market, if you could hit that subscribe button, I thank you very much. And if you are a current subscriber, if you could just look at the subscribe button, hit again, and hit the bell notification, because I've been putting on as many as I'm losing. Who knows? I know a lot of you aren't getting the notification that videos are out. Now, granted, I haven't been putting out videos for quite some time. I always say that every video I'm going to pick up the pace, but we really are picking up the pace now here because we're doing a lot of initiatives in our area and what we're trying to do with our local business here. So stay tuned for some more videos and some good things. Now, on a side note, so we have foreclosures increasing. Well, we're looking at the weak housing demand. So I found it interesting that the Home Depot sales slid for the 5th quarter on weak housing demand. All right. So essentially, if you're not buying houses, that means you're not going to Home Depot and spending money potentially, or if you're not buying houses to rehab or fix up to sell, or as an investment, that's Home Depot lives. Home Depot and Lowe's. I mean, their clients are homeowners and or investors that are buying all the materials to improve, etc. Well, if that's kind of slowed down, if things like new mortgages or refinancing or cash out refis are down as well too because of high interest rates, all that results in the consumption of goods and materials that people use to improve their homes or to rehab properties, etc. So it should come as no surprise that when you have a Home Depot or a Lowe's, you see that their sales are slumping. So obviously this is a quick graph that was produced here. You can see from 2021 to where we kind of are now, each year sales have slumped dramatically with respect to what's going on at Home Depot. At least this is their chart. So doesn't come as a surprise. The CEO basically said after 3 years of exceptional growth for our business, 2023 was a year of moderation. Exactly, because everything caught up. Interest rates were at all-time highs with respect to home purchases. If you're a primary owner occupant, if you're an investor who purchases properties to rehab or rent out or earn income on, again, those rates for those type of loans are much higher. So if you're looking at 7% loans on primaries, investor type loans are usually a bit more. So ultimately, elevated mortgage rates have pushed mortgage applications to a multi-decade low. That's obviously, you can see look at the chart here, but exactly right. It's directly proportional. As rates go up, mortgage applications go down. I know the Mortgage Bankers Association typically puts out weekly reports as to where the activity is going on in the mortgage world with respect to purchases and refis and things like that. So you can see that the stats are pretty accurate. Literally, if there's a rate increase, the previous week, the following week's applications are down and vice versa. If rates drop, you see an uptick in some applications. So we're very rate conscious as buyers, which again, saving money over the course of the loan, a 30-year loan, how much interest are you paying, right? You want to have the best rate possible. There are options out there. We do see home builders who are doing rate buy downs to entice buyers to come in and purchase their product. I'm seeing now more and more homeowners who are hooking up with mortgage bankers or banks. So and when they're selling their home on the MLS, we're looking at that as well too. We've talked to a number of mortgage people, and we're engaging that right now with respect to, hey, you want to purchase one of our properties, then the seller will be interested in doing maybe a buy down for you. Now, how does that occur? Well, essentially, it's almost like a concession, right? Almost like a seller concession, which usually would cover closing costs. And this time, the seller concession is really paying for the buy down or discount points for the life of the loan. There's two types of things. There's the discount points for the life of the loan, and there's the mortgage. Usually it's called a 2-1 rate buy down. You basically have a reduced rate for year 2, a little higher year 1, and then year 3. Basically, you're back to the current rate structure. And but the whole idea though is when you actually go and apply for the mortgage, you're being approved at the level of the highest rate the third year to make sure you can afford it based on how they look at your debt to income ratio and things like that. So this is what we're seeing in the marketplace right now. We're actually having some more information come to us on that, which is helpful because you want to move properties. You got to be, and you want, if you put it, if you want a good price for your property, there's concessions you can do to move it to help buyers, ease the pain of the high interest rates and the unaffordability that's going on right now in the marketplace. So once again, guys, I'm not going to keep this very long. Tomorrow, Wednesday, pre-foreclosure profits. There's the address. I work out of a building here. It's a really cool building. It's like a real estate entrepreneur kind of, we'll call it blockchain crypto incubator kind of facility here. It's called Real Freedom Collab. And we run our real estate business here, our brokerage firm, and our meetups, and our buy and sell property, business out of this building here. So I'm hosting an event tomorrow night. Going to be hosting a lot more. I usually do host them, on a couple, once a month minimum, but we're going to really be stepping that up as well. So if you're in the area, feel free to drop by. Okay, you can find us on Meetup as well too. What am I looking for? Investor buyers, cash buyers, need single family residence. To lend on or to purchase. Private lending partners, I need more of those. I really want to recruit real estate agents. We have a new plan now to recruit real estate agents that can help us work on the distressed property opportunity that's not being serviced or looked at anywhere in this area. Tons and tons of, I said, the shadow inventory, pre-foreclosure, distressed housing, probates. I need agents to come in here. We're going to train you how to do it. And, our firm, or how I look at things, it's not just retail sales. We're going to teach you how to do investing as well too. and we're very good at subject twos and all those cool, neat things that we do. So I'm looking for joint venture partners. Bring your distressed deals and we can work on them together because we have them facility and we know how to get those things discounted. So as I say that, again, top 10 ways to earn income and build wealth. So I've got these programs, we're going to be pushing them now. Obviously, there's a few more ideas I've added into that right now as time goes on. So we're very open to new ideas. We're very open to creative financing and doing deals that everybody can win, the seller, the buyer, whoever's in the middle, etc. So that's our scoop here in our area. Once again, I appreciate the views, likes, and comments. Please share the video with your family and friends. If you're not a subscriber, please subscribe. I look forward to speaking with you in the next little while. Take care.